Good morning. I was outside trying to figure out where to put a Starlink satellite dish. And I guess that's good enough. Nice little transition. All right, I guess I'll mark it here. Good morning, como allez-vous? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader. Well, I got poofy hair today, huh? I'm a currency trader just like you. I like trading. I like investing. I got the poofy hair. Hey, yeah, notice there's a license plate behind me that says Forex on it. But I'm pretty sure, this license plate says I love Forex. I heart Forex. Now that one's from California, right? Many, many, many moons ago. And then this one's from Georgia. But that's from my old Mercedes. Cool, right? Yeah. That's how much I love Forex. So anyways, so let me know how it can help. What do you want to do? Trade, invest, construct. Are you worried about risk and hedging? Or you just want to day trade? You want to swing trade? I don't know. Just let me know what you want to do. I am here to serve you. So you're the boss. Simple enough, right? Do we have anything on the calendar today? I don't think so. Not till tonight, right? Tonight, I believe we have Aussie Jobs, isn't it? You can check the calendar here. Aussie Jobs. No. Yeah. No, Kiwi inflation, right? No, Australia? Really? So today is Wednesday, April 17th. Is that right? Yeah. Okay, that's good. We have oil inventories, of course. Every Wednesday. EIA. On Tuesdays, you have API. Oh, we have a beige book coming out today. Cool. And then here it is, Aussie Jobs. So it must have been Tuesday of next week it was talking about us, Aussie. Wow, I can't even go that far out. Okay, Denise says, what determines which events makes it to the sonar list? Okay, cool. Let me answer that. Okay. TRADARS looks at every single one of these events. And it looks at every single one of these events going back a minimum of 1 year. Really closer to 7 years. Every single one of these. Then it asks the first question. It says, did this event produce any volatility? Aussie jobs? Yes. Okay. Japanese foreign bond investment? No. It's kind of like these stars. But it's not looking at the star. It's looking at the actual volatility. It looks at, let's say, 4 hours before the news and 4 hours after the news. And then analyzes, did this news event create volatility over and over and over and over and over and over and over again in the past? Okay? So that's a yes or no question. Does it produce volatility, yes or no? If the answer is yes, then move on to the next question. Looking at 4 hours before that volatility event and 4 hours after the volatility event, looking at the 2 hour, the 4 hour, the daily, the 2-day charts, right? As measured by 15-minute candles. So it looks at a short term, like a scalp, it looks at a day trade, it looks at a swing trade. And says, okay, does this volatility produce a scalp? In a reliable way. Is there a reliable, repeatable pattern to the volatility? On the 2 hour, is there a reliable pattern to the volatility on the 4 hour? Is there a reliable pattern in volatility for the day? Is there a reliable pattern to the volatility over a couple of days? Scalp, spot, swing, position. And if the answer to those is yes, and an indeterminate of each individual time frame, then it will make it to the sonar list. So it has to have volatility and a reliable, repeatable pattern. But it's not high volatility. That's irrelevant. We don't care about the volatility. We care about the pattern in volatility. If there's no pattern, it doesn't make the list. There's a lot more high volatility events on the calendar than just this. I mean, this goes out 2 weeks. That's it? That's the only reliable patterns? Yeah. So I just realized what threw me off. This is Tuesday next week. Well, yeah, Denise says, yeah, awesome, right? Well, the thing is, it's hard to even imagine how much data analysis goes into that. Looking at every one of these events on multiple time frames going back a minimum of 1 year. But it's really years and years. Like, I was talking to a developer and he's like, more like 7. But you didn't hear that from me. So years and years and years and years and years of looking at all these news events, analyzing volatility, and if it's volatile, then looking for patterns on multiple time frames. And if the pattern of the volatility appears on the 2-hour but not the 4-hour, it won't show you the 4-hour because there's no pattern. Like, it's incredible. It's millions of candlesticks being analyzed over time in the past, and that's why I call it a sonar. It's sound down. It's in the past. It's not up into the future, right? So it's absolutely incredible to be able to do this. And so, like, we could look at, so tomorrow, Japanese inflation, or Friday, okay, pre-London, UK retail sales, 4-hour, 12-hour, 48 hours. Where's the 2-hour? There's no discernible pattern. This one's 2 hours, 12 hours, 48 hours. 2 hours, 4 hours, 12, 48. Wait, 2, 4. See, there's no discernible pattern for euro dollar on this news event on the 4-hour. It's looked at this going back in time and it's like, don't trade the 4-hour. So what does this tell you? You got a scalp and then a swing. But you don't have a day trade. At least there's no reliable pattern that will, okay? So either scalp it or you stay in it for days. Okay? It's incredible that it can be able to do that. So let me show you the little hack. Okay, first of all, it's Friday at 1 o'clock in the morning, pre-London. Okay, if actual is less than, if actual is greater than, here's all the percentages. And there's no equal. Okay, so just there's no pattern if it comes out as expected. And you're like, man, this looks good. I want to trade this. Okay. Now you should still go through and decide what do you want to do before the news even comes out. So if you're a dollar bull, you might say, well, with UK retail sales, I probably want to trade pound. And I only want to trade pound down because I'm bullish on the dollar. Oh, well, there's 100% of the time in the past, there was a news scalp on pound dollar to the downside. So I might be into that. This might be good for me. Okay. Okay. And you're like, okay, well, so now you're going to watch. Okay. Now you're going to watch and see if it comes out less than expected. What about pound dollar? Again, even if it comes out greater than expected, there's a 2-hour short. There's another scalp. All right, so it doesn't even matter anymore. If it comes out greater, sell it. If it comes out less than, sell it. The difference is the probability based on the past. So either way, you're going to sell it. All right, so now you're like, okay, good. I'm golden. I want to sell pound dollar, and there looks like that volatility will probably, based on past performance, it's not predictive, it's just past. In the past, it worked fairly often. 66% of the time versus 100% of the time. So you're like, okay, great. So here's the little hack. I want to trade that. I'm going to do a pre-London trade. I want to trade that to the downside. So that's retail sales Friday, pre-London, and I'm going to put it on my calendar. UK retail sales. Okay. And you pop it on your calendar. Okay. And maybe, right? Maybe you do something like this. Okay, what do you think? Save it. Okay. Oh, do you want to put a reminder? Email me 10 minutes before. email me one hour before, and then notify me 3 minutes before the event. Okay. That is stunning. But I caution you every day, and I'm going to caution you again. If you're going to have this type of information, I recommend you use an ECN. It fits within just the business model of how the broker works. Of all the ECNs in the world, I recommend Trader's Way. Pretty simple. Bern, I don't know how that works. That would be a Google issue, right? But I think you could set that up on your Google, right? I don't know. Now, if you want a text message like I've done with QuantBox, well, it's just money. I could do anything you want. What do I get for $2? Nothing. So I built that AI. I built that AI alert service where that texts you QuantBox stuff, and I'm losing money on it. Yeah, I'm losing money on it. Turns out it's very, very expensive. Not just to build it, but to run it. Yeah, well, we'll see what happens. Okay. Yeah, but I don't want to use Telegram groups and stuff. No. If I'm going to do it, I'm going to do it right. I'll use a Telegram group. Anyways, sorry. All right, let's go around the world. Let's look at the short-term currency indices. Yeah, I just don't want to do it, Bern. I don't know. For some reason, I don't like it. Okay, so pig just kind of hanging in there. Let's put some more time on euro. Euro, okay. Back to game on, or continuing to game on, maybe topping out. It's doing okay. June is on the table for a cut. We'll see how that goes. Yen still weak today. Dollar still strong today. Swissy still strong today. Lots of things have hit target. Burns is like, yeah, this is not a... Well, that's the thing. It's not an argument, right? It's just, I don't like it. I don't want to do it. I want to build a proper infrastructure that will send you text message. I don't want another piece of software. Oh, well, to use this, then you have to sign up for... No, screw that. No, I build proper software. Or I don't build proper software. Right? Yeah. I guess I want to own the intellectual property. Something like that. All right, so Biddy coming down. It's moving pretty quickly, huh? Yeah. Oh my. Are we going to hit 60 today? Yeah. Beautiful roll reversal here, then a beautiful roll reversal there. Here a roll reversal, there a roll reversal, everywhere a roll reversal. Okay, we're on our support line we had for a while, so we'll see. Is it going to breach? It's moving pretty fast. So anyways, Bitcoin coming down. Check out the stock market. Maybe an up and then a down. How do you guys feel about something like that? AO, area of opportunity right there. And AO kind of there. That looks very fibbish to me. So you can do it that way. Yeah, it's about the same. That's right, JP. Yeah, you mentioned that I think on Sunday, right? You're like, I think it hit 60. Yeah. Well, so 61. Yeah. Okay. Well, Bern, it's not the issue of WhatsApp versus Telegram. The issue is I want to build the proper software. I don't want to say to use QuantBox you need to you download and install WhatsApp. No, no. That's duct tape. I want to do it right. I want to build something. So anyways, anywho, I'll move my stop. In this case, let's move it totally to 0 now. Oh, no, wait, that's my stop with profit locked in. Oh, man, really? I'm going to put it to break even. Who cares? All right, nice. Maybe it's moving on me. But anyways, let's kind of analyze it this way. Oops, don't want to do that. I'm just trying to grab this. Come on, MT4. Oh, you son of a... Still, I can't grab this. There we go. Son of a... All right, so there's the channel. Maybe you pull this channel down a bit now, huh? Maybe. Makes sense. Yeah, you could. The old school fellas, the old school guys might do an Andrew's pitchfork. And you end up getting basically the same. So why don't I delete that? Just because it's so chunky. Delete this one. So chunky. That should be connected to that low. I guess I could decide whether I want to base it off the next top. That's really slopey. So all of it sets up potentially, right? We can look at NASI. And NASI finally broke through support. We've had it identified for quite some time. Dow broke, then S&P 500 broke, and now NASDAQ broke. And we fulfilled the pattern that I teach at Investor Bootcamp. For $88, you too can know how to trade. This on April 1st, this on April 5th, this on April 11th predicts this price right here. Not this, not this, not this, not this, not this, this. Okay. Now it can go lower, but that is the repeatable pattern. It's impressive, isn't it? Do you know who taught me that? Nobody. I learned from observing. Okay. Neato, right? Well, yeah, so now let's once again predict the future. This is plausible. This is plausible. Okay, can you sell here? No. Okay, no. But you can sell where the first opportunity is where you believe this 21 is going to be in the future. So, you could do one of these. Do you know what this is? Don't say 21 EMA. Okay, that is not the 21 EMA. You're like, it is the 21 EMA. Yeah, on the 4 hour. It's the 5 EMA on the daily, which means that is an aggressive sell. Okay. I can't tell what's true or dreams. Deep down inside, I feel my screams. But the terrible silence stops me. All right. See? See? Told ya. And it won't lock. All right. Maybe I guess I got to move to trading view, huh? So what do you think of that? That is a possible trade plan. May not happen today. Did you guys review today's trade setups? If you get the Quant Box alerts, type in Quant Box. If you get the TRADARS alerts, type in TRADARS. If you get both, type in both TRADARS and Quant Box. Meanwhile, I'll pull mine up. I'm reviewing. I have the morning report for the London Open, and I have a report for Kiwi Yen, EuroCAD, NASDAQ, Nikkei, Aussie Kiwi, Kiwi CAD, and Pound Aussie. That was pre-London. Then I was updated again at 5:58 this morning. Kiwi CAD, Japanese stock market, Pound CAD, and NASDAQ. So it was updated. Cool. All right. And then at 7:20 this morning. So the other one was 5:58. So about 90 minutes later, right, I got the TRADARS morning report. And it does something completely different. It's not looking at anything fundamental. Isn't that neat? Nothing. Okay. And let's see if I can turn that light off. For example, Amazon, nah. Tesla, nah. Google, ooh. Google looks nasty. Oh, maybe Google's vulnerable. Meta, Nvidia. All right. USD CAD. There's a little scalp on USD CAD. I was alerted to this morning. You see it? Okay. Pretty specific. And of course, it's all written in the English language. Okay, so anyway, so I'm like, okay, USD Swiss franc. Ooh, that looks interesting. Now, it's also a scalp because it's the opposite of what has been happening. See, we've been buying dollar, and it's like, no. You have an opportunity to sell that this morning. It's just a little scalp, but you can pick up some pips. Okay, what else? Bitcoin. Okay, Bitcoin's falling, right? 2 hours ago, see, that's Bitcoin. Traders already told me, sell it off the top of the channel, take it down. So you had already been done. You would have already made your money. It said sell at 65, get out at 62, 64, 65 area. And get out at 62. So you're already done for the day. You already made your money on Bitcoin. Then it talked about Ethereum. Then it talked about the S&P 500. So is the S&P 500 going to go up today or is it going to go down today? Just today. Oh, okay. Little scalp up into the resistance. Very cool. It's on a 30-minute chart. Supported by upward sloping moving average. Okay, great. Oh, there's a crude oil trade today. Would you like to know what technical analysis suggests oil is going to do? Does anybody here even trade oil? Does anybody here even care about oil? Let's clean this up. Let's just do a daily confluence. Okay. Does it seem like oil's falling right now? So it's been falling for an hour straight, right? Well, let's see again what time this showed up. At 7:20. So an hour and a half ago. Okay? An hour and a half ago, when oil was Okay. When oil was here, let me draw it. Delete. All right. So when oil was here, you got an email. It cost you 61 cents to get the email every day. 61 cents a day. And it said this. Sell it at 85, which is right there, and we're going to take it down. And an hour and a half later, it's fallen from 85 to almost 84. Would have paid for the entire month already in the first hour of today. Dude, it's insane. That cost 61 cents a day, that email. Mr. EFX, are you saying what's fundamental versus technical? Is that your question? Jim loves WTI. Yeah, it's wonderful. The ultimate energy drink. What is the... Hang on. All right. Hang on. I don't have enough stuff going on. All right. TRADARS. So what's your question? So you want... So you're asking me this one? Oh, Mr. EFX, I can teach you an amazing amount about fundamentals. So, Mr. EFX, how would you like 16 hours of macroeconomics and probably about the same, another 16 hours? So let's say a total of 30 hours of training on macroeconomics and central banking monetary policy. 30 hours. How much do you think that costs? A lot of this stuff I learned at Harvard. So you get like a pseudo Harvard education in macroeconomics and monetary policy. It's $88. It's $88. So anyways. All right, so Cash Money. So I don't understand your question because it's all answered right here. Right? Okay. Oh, so you're asking that email, that's the $19. You get it here included and you get it here included. Yeah, so it's just that. Now this is interesting. This is really, really interesting. This doesn't even exist here. This is an upgrade, and it's an optional upgrade, and I'll show you. You subscribe. Okay. And you add it here. Okay. Now this is interesting. You haven't seen anything like it. I suppose I can show you. I'd have to find it because it doesn't come out often, but it comes out. So this is where I don't have any emails open, so I can't show you. But this upgrade to the premium, to the plus service, okay, what it's doing is it's kind of like this. Let's log into TRADARS. All right. All right. So it's kind of like this. Active trades are emerging patterns that have fulfilled and are in play. So I'll move to these, okay? These are, you can organize them by probability. Only show me trades that are 75%, okay, or greater. I mean, this is part of the plus. I mean, imagine this. Like, these are not just patterns that are forming, but have formed or in play. Like, oh my God. Okay? All right. Now imagine it's watching euro yen. Okay? And it's watching it because euro yen is in play. It's an active trade. It's not an emerging pattern. The pattern is in play. But it notices, so here's the 60-minute, right? I guess I should do it in yellow. It'll stand out nicely. All right. So it's watching the 60-minute chart. And it's bullish on the right on at least in just this little move here, right? Or maybe that's not a great example. Let's move it down here. Okay, let's say it's watching USD Swiss franc. That's better because the other one's just a scalp. All right, so here's a USD Swiss franc. And it notices the down play. So here's the entry, here's the target, all that kind of stuff. But what if it noticed USD Swiss franc down on the 60-minute and the daily? And sometimes not just the daily, but also we'll say 4 hour. Okay? Okay, so it's watching USD Swiss franc because this is actually in play. And then it noticed the 60 says down, the daily says down, and the 4 hour says down for different patterns. Different reasons. Each with its own reasonably high profitability, right? Would you like to know when TRADARS spots technical trends? Remember, it's just technical analysis. And it finds a breakdown in this pair on 3 time frames, selling for 3 different reasons. Would you like to know? And that, and it emails you. So it's not on here. There's no page here. It just sends you an email. And it's like, hey, did you see that? And they're good. They're really good. Okay? They're really good. They're really good. Yeah. And I don't have an email open to even find you an example, but let's see if I can. I don't know what email I'm subscribed with. Maybe FX Bootcamp. What do they call it? Correlating alert or something. Let's see what they call it. No. I'm just seeing if I can find one, because it mixes everything together, my Gmail, the messages, but also all the subscription type stuff. I think it's called correlation, the correlated alert. Does anyone know? Correlated. Oh, I see. It's sending it to a different email address than this email address. So what email address is it sending it to? Maybe this one. All right. Hang on. I just thought you might want to see it. All right. Yeah. So here's a TRADARS market open report. Oh yeah, correlating alert. I found a bunch. So, okay, so I just talked about USD Swiss franc. Turns out there is one. All right, so let me pop it. Okay, so this happened today, 5 hours ago. Okay, USD Swiss franc sell. The following coinciding trade setups have been identified and forecast a similar potential market move. The following assumptions have been made. At least a 20 pip move, okay, at least a scalp. The key level and chart patterns were at most 5 candles apart, so they're happening about the same time. Direction down, identified early this morning. Okay, breakout. Okay, the breakout price was 91. They expect 26 pips on this one with almost a 70% chance of success. There's a 30-minute triangle breakout and a 1 hour drop to support. See? Okay. So Jimbo, it's a good question, but the ultimate thing is, if you need that, don't sign up. Again, it feels like, and I'm not putting words in your mouth, but I am putting words in your mouth. But if you're like, I'll sign up if it makes me money, don't sign up. No, don't do it. Okay? So here's the way to look at it, Jimbo. This is not an alert service. Please do not sign up if you think this is an alert service. It is not. I'm going to do a whole presentation. I'm going to build a whole training thing. I've been spending a lot of time putting together like the near future for this service. And the whole idea about it is it's not an alert service. So again, you're like, well, so what's the success rate of that? Okay, I know. Okay, but you gave me an opportunity to do my speech anyway. So anyways, thank you, Jim, right? Or Jimbo. Thank you, Jimbo. So here's what I'm getting to. This is factual. This is 100% correct. Is it going to make you money? How the hell would I know? I don't know the future. But there is no doubt. Well, I do have a test, but not this. And I've already answered that with the patterns, right? Remember, I think you asked last week with the patterns. And that, I know, right? We know by measuring the success of patterns over time. Okay, great. But like this is simply a heads up and to say, hey, Jimbo, this asset is behaving in a similar way on multiple time frames using different technical approaches. That is 100% factual. And so it should be like, go take a look, Jimbo. Go take a look. Put this on your radar screen. Right? Please be aware. So this is a 24 pip opportunity. So again, a pissy little scalp. But this came out again today, 3 hours ago. Look for an opportunity to buy a dip on the hourly. euro yen for a small long. And it should get you up to this resistance level, maybe beyond, but we don't know. It's like it may go beyond this, but the thing is up until 64.70, which is resistance. And that's how you get here. So this little, it probably will produce 24, maybe a little more, but that would be the logic, right? Isn't that cool? And these are happening often. Okay, often. Correlating alert, once again, today, 6 hours ago. EuroCAD short, 27 pips. You see, they're not long term. These are like day traders and scalpers. Heads up, bro, EuroCAD's falling. 70% probability. Cool. It's not a lot of pips, but it's something. Okay? It's good, guys. It's good. It pushes you in the, look at this, don't look at that. You see? Well, remember, Vicky, it's not thinking about GDP. It's not thinking about jobs. It's not thinking about inflation. It's not doing anything fundamental. It's not making a decision. It's not thinking about whether the trade is good or bad. It does one thing, and it does one thing only, but it does that one thing extraordinarily well. It does technical analysis. And it just shows you where, like, in the beginning where newer traders learn how to trade, they just simply learn technical analysis, and sometimes it works and sometimes it doesn't work. Sometimes it works, sometimes it doesn't work, even if their execution is good, but usually even then execution is poor. Okay, Jimbo, it's only email because it sends you the charts. So you have to have the messages, right? Your customer, I think what's happening is there's somewhere there's a server time that's different from the other server time. And I'm not sure if it was Europe time or I think I have something set. I thought it was European time being different from U.S. time, but I think what's happened is somewhere there's a server or a setting on the wrong time. So it shows that it's an hour off, but it's not. It's not. Because I noticed that on my calendar, it says like the news is 7:30 tomorrow morning. No, the news is 8:30 tomorrow morning. So but anyway, so it's not really off. So I need to put that on my developer bug list, if you will. Okay, so anyways, guys, if you're going to be a better trader, if you want to really improve your trading, what you need is QuantBox and TRADARS, and start learning both fundamental and technical analysis. Oh, it's already out, Sky Killer. It's beautiful. It came out a month and a half ago. It's fantastic. I love it. It's like the simplest calendar in the world, and I love it. It's ugly as sin, but it's like those ugly dogs that are so cute. No, it's for everybody. Well, everybody is pro except. Oh, I see. Are you on the starter kit? Yeah. 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 If you're yeah. Yeah. Well, it's not retail anymore, but yeah, it used to be called retail. Yeah. That's for you to kick the tires and stuff like that. But I might go in and clean that up and see if I can add it there for you. and make that a little bit nicer. Okay. Yeah, that's possible. Your customer, it has to get emailed out and go through the process, right? Hakeem says, "Hey, have I looked into the prop firms?" No, that's on my to-do list. Yeah. Well, with QuantBox Pro, let me log into that. Oops. QuantBox. There's been quite a few upgrades lately, which I haven't really publicized very much, or at all, really. Only people that have it know about it. So I guess is that that's not publicizing, is it? Okay, so let that load. Okay, great. So check this out. Okay, under economy, you have new gauges. Under inflation, you have new gauges. Okay, under employment, you have new gauges, right? Isn't that cool? Under interest rates, you have new gauges. Loading, loading, loading. And then you can load them for different asset classes, right? It's beautiful, right? All right, cool. There's some neat stuff. But also I wanted to point you to, let's go to Total Money Tracker. For this, I'm going to have to zoom in. We track Ethereum, platinum, copper, iron ore, right? The Russell 2000. Anything else on there? Yeah, so we've added asset classes here. So on the Commitment to Traders report, we're tracking copper. This is institutional positioning of copper. It's nice, right? So here's small businesses. Here's their borrowing cost, right? Small businesses. Here's growth companies. Here's multinational multinational conglomerates. Okay, here's a balanced portfolio of growth and value. Okay, so we're tracking all this stuff. This is institutional positions, and this is retail positions. Right? So we've added all these new asset classes. So I just did like a half an hour presentation the other day on trading copper, for example. Oh, here it is. It's nice, right? You can plot the VIX. Okay, check it out. Volatility is up. Typically, it's down and then up. This is the normal year I predicted, or in January, I talked about this shape to the year. And then we figured this year would be different, and well, there you go, definitely. And now you can see how that impacts the shape of the stock market. Typically, I buy in this period and go away. This year it was up when it should have been down, and down when it should be up. But that has to do with the Fed, and that has to do with politics. Isn't that cool? Well, what about the Russell? What about platinum? Very unusual, huh? Why? when you have persistent high inflation, you're supposed to buy precious metals, not just gold, actually all commodities. Okay? Actually all commodities. And so look at all these new cool things, right? Dollar index. You want to know the shape and the seasonality of Bitcoin? Uh-huh. So anyways, really neat stuff have been added. And you can see it on the scatter plot too, where you can, so commodities only. It used to be just gold and oil, but now we have platinum, oil, gold, silver, and well, for some reason they didn't put copper on this one. I'd like to have copper on here, so I'll talk to them. It's just not a priority right now. I just wanted this information, right? Okay. Stock indices only. Japanese stock market, Russell 2000, S&P 500, yields, the Dow Jones Industrial Average, NASDAQ 100, the German 30, the DAX. It's cool, right? This is real time. It's showing you where all these things are positioned, just so if you don't know how it works, you're like, Wayne, I don't understand this scatter plot. Okay, let's say you wanted to know, Wayne, tell me, Wayne, tell me how bullish or how bearish I should be on the NASDAQ. Okay. All right. And that's according to COT data, retail sentiment, seasonality, technical trend, GDP, inflation, labor market, interest rate differential. Okay, should I be a bull or should I be a bear? What about the Dow? Should I be a bull? Should I be a bear? What about the Japanese stock market? Should I be a bull or should I be a bear? And again, looking at all these macroeconomic factors. Okay, what about gold? What about S&P 500? Okay, all of these things, right? Okay, but this is long-term stuff. When you're talking about interest rates and employment, inflation, GDP, seasonality, positioning both by retail and institutions, the technical trend, that's a lot of data, right? Right. But what's happening today? What's happening today? What about now? Not long term, not this week, not this month, not this quarter, but like, what about today? Well, what you want to know is, should you be bearish? Okay? And what would you do if you were a bear but it was rising today? You'd want to sell the rally, wouldn't you? At some level of resistance? Right? You're a bear, but it's up today. Good. Well, maybe tomorrow you get to sell it. So how can you easily get this data and then very quickly compare it to this data and then go find a chart to trade? Well, here's what the scatter plot does. Down here are the quant box scores. These are all the scores. Okay, that's the long-term analysis. Should assets be going up or should they be going down? So the farther, like this is a 6. NASDAQ is a 4. Okay, you see? 3, 2, 1. So the closer and closer to neutral. -4, -5. These are things that should be bearish. These things should be bullish, and to different degrees. And then you look at what's happening today. Is the market up? Is that asset up today? Or is it down today? relative to what's normal. So you would, QuantBox thinks the Japanese stock market's bearish, and it fell 1.3% today. QuantBox thinks the Russell 2000 is bearish, and it fell 0.4% today. Okay. Slightly bullish in score, but slightly bearish in price. This is what's happening today. Okay. QuantBox. And remember, the score on the bottom doesn't change very often. It's long-term macroeconomic analysis. So yesterday and the day before that, you were a bull. And so today it's up, which means yesterday it's up 0.7. You probably bought it yesterday. You shouldn't be buying it now. It's already up. Okay? Yeah. And so you can see, if you are combining your fundamentals with your technicals, you would look at it and say, okay, this is slightly a buy a dip scenario, just ever so slightly. Now, in the near future, it's probably going to be over here, and that's what's going on. But you might look at this and maybe it's a dip today. This is already up. This is already up. This is already up. We already knew that. So the question is, will S&P 500 move up here or will it move over here? Well, that's for you to decide. So you can say, well, you might be slightly risk on today, and then you go to that chart and see if you have a buy the dip scenario. So we know it's been down, and we know before that it was up, so maybe it's doing one of these things. Or maybe S&P 500, if at support, then you look for the opportunity to long. The thing is, it's out of position. It's down with a score of 1. Well, that's not a very good score. But yields are down right now with a score of 6. So that means yields should go higher, which means you would go to the 10-year T-note and sell it. And when the 10-year T-note is falling, the yield rises. Okay. So in something that used to take, let's say, a half an hour or an hour of your time. Okay. Hakeem Prince says, hey man, can you be a bull when the risk gauge says bearish? Well, that's for you to decide. So he's talking about the risk gauge. Makes sense, right? So you might say in that case, you don't want that buy the dip scenario in the S&P 500 because you believe it's moving from right to left. So you're a seller of the S&P 500. See, look, sell the S&P 500 today, this week. Sell the S&P 500 this month. So if you're like, well, I don't want to buy it a dip scenario because you believe the longer term trend is risk off, this is monthly, okay, and you're a bear, so you're doing the opposite. That's okay. Then you would agree with the scatter plot. And you know it's shifting from right to left and will soon have a negative score. That's part of your alpha. That right? Like QuantBox gives you the data so you make a decision with that. And for some reason NASDAQ's up, but S&P 500 is down. So maybe you should be selling NASDAQ today. You see, that's how you'd use that. So let me go back to the scatter plot because Hakeem makes a good point. You're like, okay, so Hakeem says, okay, well, based on our analysis of the risk market, this is probably going to fall in the near term, and probably produce more and more of a negative score. Okay? So therefore, this is out of position to the upside. Okay? If this is going to fall, and this is going to fall, this is going to fall, which would probably make this rise. This is already down. Okay? This is a U.S. stock market. 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 So going to your point, Hakeem, if you're a bear, okay, you've already sold this. You've already sold this. You're probably going to sell that, and you're probably going to sell that. And all of this is going to move from right to left. And remember, when you have something like sloping like this, if the mean average is this way, everything up here is bullish and expected. Everything down here is bearish and expected. That's what you want to look for. So really, if you're a bear, you want this. Okay, if you're a bear, if you're a risk off, okay, then you're looking for that. Okay, so you have to interpret it. You still, right? But at least you have the data. This used to take hours or would even be impossible because it's too much data. You know what I mean? It's too much data. So if I'm like, let me give you all the data in the world for you make a decision on how to trade. Here it is. Now you have to watch this and analyze it. And then compare what's happening right now in the market. So now you got to go from here and compare it with that. You're like, dude, that's like impossible to go through all of these multiple times a day and then do comparative analysis to actually all of those charts, dozens of charts compared to, so this is long term versus short term. And you're like, dude, I can't do that amount of work. Well, now that takes seconds. Now it takes seconds. What's in position, what's out of position. Takes seconds now versus nearly impossible. Okay? Right, Jamie Dimon spoke yesterday at his conference for JP Morgan, right, their investor conference, and he said he's putting the bank all in with artificial intelligence, and every single department and every single decision tree is going to have artificial intelligence involved. Jamie Dimon runs the most successful bank in the world. And he's all in. Every department. The thing is, are you incorporating this type of technology into your trading decision-making process? If the answer is no, you are going to be left behind. And I'm shocked when people sign up and then quit. I have no idea why you would sign up for QuantBox and then quit. Or sign up for TRADARS and quit. It's like you just quit the entire industry. I don't get it. I really don't get it. If you sign up and quit, I'm like, I don't know. I don't know if you can be helped. It's choosing to quit. Like, I don't get it. The whole world is incorporating this technology. I can tell you, and I'm not giving you a sales pitch. I'm telling you my honest review and feedback from having watched both these technologies very closely. It's incredible. So if you sign up and look around and you're like, don't get it, ask for help. It's like if you sign up and then quit, it's like you just jumped off the ledge. And I'm like, holy crap! I thought that guy was okay. I thought everything was fine. I thought that trader was happy. They have all these amazing resources. And then all of a sudden, boom, they're off the ledge. I'm like, oh my God, what did they need? What did I not offer them? What did they need a helping hand? Did they need a tour? Did they need a training course? Holy crap, when someone signs up and quits. Now, it's a small percentage, but I'm just flabbergasted. Flabbergasted. I'm doing a disservice to somebody if they sign up and then quit. How could you have something so extraordinary in your hands and then you're like, I don't get it. I don't like it. And you're just like, yeah, I'm going to quit. Like, dude. Yeah, but like, ask for help, right? Right, Jim? Like, oh my God. So I need to do something. And that's one of the things I'm working on right now. You have a genie in the bottle. Right? You have a genie in a bottle. And you're like, I don't get it. The bottle's ugly. What? Dude, you don't get it. It's not about what the bottle looks like. I don't like that color glass. Dude, there's a genie in the bottle that is the most powerful entity in the world that can grant you opportunity. Okay? I don't like it. It's ugly. Like there's like a disconnect from the reality. It's not the bottle, bro. It's the genie inside the bottle. Right? So I'm like, oh my God. Okay. Oh, okay, Elm. What do you want to trade? Like, what do I got going now? So I have 325 pips, S&P 500, silver, and Hong Kong stock market. What do you want to? NASDAQ and Dow. Oh, dude, that's easy. All right, so cool. Okay, cool. All right, are you a bull or a bear? I mean, I've already done all this, but I can't remember if I did it earlier today or not. Okay, let me show you. This is the 21 EMA on the 4 hour. Let me show you. Okay, great. So I analyzed this hours ago. I'm done. All right, what else? I've already done the process. I did all the work. I did all the analysis. I've analyzed it on multiple time frames. I've already done a video on it. Have you guys seen youtube.com/quantbox? I think I did it here, right? Oh, and there's the new calendar. We had a question about the new calendar. That's yesterday. Oh, this one. Cool. Turn your notification on. Ba-da-bing. You can watch it in 35 minutes. There's the process. But you have to understand that there's a lot going in there. Are you a bull or a bear is the most important thing. So let's do it this way. Do you consider this a lower low? Okay, if you see, let's say that is support, then you probably would identify that as a lower low. Okay, so now you have a breakout strategy. How do you trade a breakout strategy? Breakout strategy. Step 1, or opportunity 1, kick it off that moving average. Opportunity number 2, kick it off that moving average. Done. Okay. Okay. Yeah. Now, if you zip over, it's more obvious on S&P 500. And On one of these charts, I have the annual. So like going from memory, our projected high for the year was like this area. That was our projected high in January. Okay. So anyways, then what? Then the market makes a lower low off of resistance. What did I tell you back then? Head and shoulders. Okay, look at. You were prepped for that. It's a standard operating procedure. But anyways, at some point, there's definitely this. Okay, and then down. So the issue we're having now, Elm, basic technical analysis. Again, all of this is taught at Investor Bootcamp. Okay, this predicts that. So we're already done the month of April. It's done. Okay, this is a top. This is the target. We're done. So there's a bit of a danger here. Okay, normally you do something like this, or normally you do something like that. And that's why this is all plotted. And this is still a resistance area, so it's almost preferred it goes at that high. But nonetheless, we don't know what's going to happen, and nonetheless, this is bearish. In scenarios where this hits early in the month, and it's about, I guess we can call that the 16th. 16th is kind of middle. If it happened on the 9th, I would have thought that this would come all the way back here. And it might. But I wouldn't call the 16th early in the month. So something like this is possible, but less likely. So I think there'll be less profit taking by the bears. And if anything, more would enter the market, right, Al? So where would they enter? Well, okay, this moving average is a maybe. This moving average is a maybe. But not where they are now in the future. So really this price and probably about that price because this is going to continue down. Okay, then the next theory, using pivot points. If they were locked in, where's next week's sell? Right there. Where's next week's sell? Right there. It's the same two prices. So now we have a zone sell between the 5 and 21 EMAs around 151, which is not far from where we are now. And so, are you ready, Elm? Something like that. Okay. And exit right around 5,000. So let it go up for a day or two, closer to 51, and then take it down to 5K. Well, Sky Killer, maybe he's one of my clients. Okay. How would you grade that, Elm? 10 being the best, 1 being pathetic. How would you grade that? Elm? Okay, so what part is missing for you? Let's keep going. Let's keep building on this. It's not an argument. I'm like, how? It's more like if you were my client, you're like, okay, I see it technically, but I have some other concerns. Bring it up. Let's do it. Let's go. Right? Hoo-ha! I ain't... what's he saying? I'm just getting warmed up. Remember Scent of a Woman? You call yourself a bird man. How do we bump this up? I'm not a 7. I'm a 9 to 10. You get, right? 7 is unacceptable. Let's build. Let's build on this, Elm. Okay. Unpredictable unemployment claims tomorrow. Why? It's totally on trend. Markets don't seem very stable at the moment. No, we just hit the profit target. That's what I'm saying. I think it's just very hard to make long-term prediction. Really? All right. Well, let's remedy that. All right. Let's go to... All right, let's bring it up. Let me drag this across. Okay, so let's take a look at smart money using the Fed funds futures market to analyze through negotiated in billions, hundreds of billions of dollars in negotiated cash contracts between banks. Let's take a look. We are currently at... where's the rate? Where's the current rate? Current. Okay, 5.25 and 5.5. So right now, there is, as far as the May 1st meeting, there is only a 1.6% chance of a change in interest rates. But that changes a rate increase, not a cut. Okay. All right. Well, we'll look at this. And a month ago, there was a little bit of hope of a cut. Of a cut. Okay. Let's go to June. 1 month ago, okay, there was a 55% chance of a cut. This was actually quite a bit higher 2 months ago, 3 months ago, 4 months ago. 4 months ago, this was probably close to 100%. Okay, Elm? And now there's only an 18% chance, 19% chance of a cut. It's gone from like 80% to 20%. Then we go to a September meeting. Okay. And, well, it's dropped very, very significantly as well. What I'm getting at is as you go through, okay, these numbers are changing. When they cut and the number of cuts are changing dramatically. Why do I bring this up? Well, first of all, these are based on prices of paper being traded, money being traded between banks, smart money, trading with smart money. And they're negotiating the cost of loans to each other, and which is normal. This is totally a normal market. It happens all day, every day. But the prices reflect future interest rate expectations. And we were at a point where there was 100% chance the Fed would be cutting certainly by June and then continue. And now we're at definitely not going to happen, and maybe only 2 cuts this year, maybe only 1 cut this year, maybe even no cuts this year, which was unthinkable 3 months ago. So when you look at the stock market and you look at how it rallied in the previous period, this was all based on money becoming cheap. This was all based on the stock market, or sorry, the Fed cutting interest rates. And you get a scenario where you get the expected return of a stock is equal to the risk-free rate of return plus the beta of, the expected return of the market, S&P 500, minus the risk-free rate of return, which represents the opportunity cost. And when we talk about the Fed cutting interest rates, there was a reasonable chance they were going to cut here, and a reasonable chance they were going to cut here, and a reasonable chance they were going to cut here, and a reasonable chance they were going to cut here, or some variant of that. And cutting here, right? Some variant of that, whether it was 1, 2, 3, 4, 5. Remember, they were going to have 6 cuts this year, and then it was 5, and then it was 4, and then it was 6. And then now it's almost like none, right? So the thing is, as the market was going up, we were assuming, it was going to be 6 cuts. And then they're like, well, it's not going to be 6, it's going to be 5, but that's still pretty good. And then it's not 5, it's 4, and it's not 4, it's 3. And now we're getting to the point where there's maybe no cuts, and there's a big change here, because what we're talking about is the risk-free rate of return. You could substitute like the Fed funds rate, or very often this is the yield on the 10-year T-note, but they're related. So when the Fed cuts, the yield on the 10-year falls too. So what happens is, as this RF number falls, by just simple mathematics, the value of a stock rises. And all these cuts were expected, so money was going into the stock market. And now we get to the point where, like, oh crap, we priced in all these cuts. And now they're not going to materialize. Our models are wrong. These stocks are too expensive, because taking them out is equivalent to raising interest rates back up again. And if the risk-free rate of return, or sorry, the risk-free, if the risk-free or the Fed funds rate has to be repriced back up to 5.25, then the value of the stock market should be lower. And we've entered a period here where, I'm sure you know, but Jay Powell did a conference yesterday with the Bank of Canada, or in relation to trade with Canada. And he said yesterday, in so many words, it's been interpreted, that he kind of admitted he was wrong, that there were still 3 more cuts coming this year, and now we got to price them out, which is kind of like saying, if the Fed's not going to raise in June, but they're going to cut in June, they're going to wait to cut in September, which means now there's only 2 cuts. It's just like, as of yesterday, the Fed just raised interest rates, because you have to take out the June cut. And when you raise interest rates or remove the cut, which is the same as raising, then the value of stocks falls. And fundamentally, the head of the chair of the Board of Governors, the Federal Reserve Banking System, and the chair of the Federal Reserve Open Market Committee just said down. So we incorporate that into our fundamentals. And you also see that happening in real time in this market too. The money market, basically. Think of it that way. Interest rates are shifting to the right. Okay? September, things shifted to the right. But what I mean by is we're at 5.25 to 5.5 now. And going out to September, there's a 30% chance, 31% chance, a 1/3% chance that the Fed still doesn't cut by September. Forget June. They might not even cut in September. Oh my God. The stock market's overvalued. The economy is good. It's not an economic thing. The market, the price of these assets is too high. So then you go into like, well, that's cool. I guess I should sell. Oh, I did. I did sell. Okay? So, Elm, you have to understand. Well, first of all, we've talked about this for weeks, so I don't know if you were here. I've set this up over the period of weeks, not hours. Weeks and days. I've had dozens of conversations in regard to all of this thought process. I run Investor Boot Camp. We talk about it in the day trading group. We talk about it in the swing trading group. I run the Council of Investment Advisors, where we've talked about that, and we've set it up, and we're actually trading and building and constructing portfolios to manage this. I just did a 45 minute to 1 hour discussion on how to hedge, so on and so forth. So Elm says, so we can expect a good drop. Well, when you add seasonality, okay, when you add seasonality, let's go here. Okay, we can add seasonality to the S&P 500. What I said in January, okay, 100 days ago, okay, Elm, I charged $4.44 for this knowledge. I said typically there's a shape to the market. This year's going to be different than the normal year. It'll probably have the up happen early, and then a collapse and no recovery until November. And therefore, once we have our early, Q1, Q2 peak, I know the time, Q1, Q2. I don't know the price. But if it peaks, or when it peaks, my screen froze. When it peaks, there we go. When it peaks in the early year, it could therefore fall for 6 to 9 months. Whoa. Yeah, I said that 3 months ago. So your big question is, did it peak already? Okay, our summer peak, which usually happens more like June, July, may have peaked now and may not recover. And I said in January, the third week of November is the new up. Okay, not September and October, middle of November. Oh my God, so if this is our peak, if we just peaked. So you're like, dude, so it could expect a good drop? Oh yeah. A crash? Oh, I don't know anything about that. I don't know the velocity, but I do know the shape of the market. And I also understand that we not only are we trapped in a retreating Fed policy of dovish to hawkish, but we also have the fourth year of a 4-year political cycle. And I've incorporated that into my analysis too. So when I say I might want to sell a lower high, I have all of this in mind because I've thought about it for 1,000 hours. I know exactly what my intention is. And I can tell you the logical prices. Now, some of these prices shift a little bit if it's a moving average or an unlocked pivot point, but I can roll with it. I got some finesse. I can roll, right? I can adjust in real time, but my strategy does not change. I just adjust tactically in the fog of war. But I'm an ass kicker, okay? I'm not a 7. Okay? Harvard put me through 5 years of examination and said I was one of the best at their little university. Yeah. Love it. Not a 7. So when I'm thinking about selling here or here, oh, that's somewhere between 9 and 10. Whether it works out is irrelevant because things change. But we know things have changed recently. As of even yesterday or a while ago, we started getting changes in things like inflation. So on on February 13th, I became a bull on gold. I had been a bear on gold for 2 years. I used to laugh at people for trading gold. I'm like, that's the dumbest thing ever. What kind of knucklehead would want to buy gold when inflation's falling? There it is. Sorry, February 19th is the day I became a bull on gold. That's the day inflation started to rise in the United States. And then it did it again. And then it did it again. And that is bad. And now that as the world is starting to incorporate this new data of badness, we go from no underlying intrinsic trend to definitely risk off. Okay? Yeah. Okay? Now, it says here bearish on gold. That's normal. But we don't have that situation. But I am buying dollar and I am buying Swiss franc, so that's good. But I'm buying gold because it's not an economic phenomenon. It's an inflationary. When you have slow growth and high inflation, you sell your stock and you buy real assets. So you get out of financial assets like the stock market and the bond market, and you buy things like real estate and gold and beef and wheat. Because you can't eat your S&P 500 index. You have to sell it. If your children are hungry, you have to sell your S&P 500 to get cash to buy food. So guess what? S&P 500 down, food up. Cool, right? I know, a little bit of a bully, I know. But we're looking at now how banks are behaving. This is not a survey. This is money, the mid price of these contracts, and the derived interest rate of these contracts, and the change over time, and the direction of the change over time gets me to do things like sell the stock market by dollar. It's sweet, right? Or I look at changes in the VIX, changes in gold, changes in yield, change in the stock market, change in the dollar, change in the yen. Look at them on multiple time frames and take the correlation of all of them. Right? Like, yeah, dude. Yeah. Okay? So I go over that. If you want to see another version of all that information and more, I already did a video at 6:30 in the morning on this. Dude, it's like practically lunchtime. Okay? Okay? Cool. All right, Elm. Did I get it higher than a 7, Elm? Come on, Elm. Elm. Elmy. Elmer. Alhambra. Well, Michael, let me ask you this. Michael brings up an astute follow-on question. So if inflation was stable and GDP, okay, was fine, let's say at 1.8%, and inflation is at 2.2, what about gold? Well, you can own some gold. It costs you money to store it, and it pays you no yield. So all you have is capital gains. But there's no reason to buy it. Thank you, Elm. Thank you. I appreciate that. All right. Okay. So why do you want to own gold? You think it's going to go up. Okay. Why? Okay. There's no reason why. That's the issue. Okay. Now, if you want to know why a central bank would buy the gold to push up the price, you need to know about monetary policy. So you join Investor Bootcamp, you pay the $88, you start the training course, and by hour 3, I'm teaching you how to manage the balance sheet at a commercial bank. And if you know how to manage a balance sheet as a banker, then I can then teach you how to manage the balance sheet as a central banker. So now you'd look at the gold market and say, well, what would be the reason for a central bank to buy a gold or maybe sell gold? Like, you'd have to know what the objective of the monetary policy is and how they would execute maybe gold as part of their strategy. Most people that blurt out central banking when talking about gold have no idea how to run a central bank. So they're just doing some YouTube guru babbling. All right, so we go away from that. What would you do if the economy was slowly growing and inflation was under control? So we have decent productivity, low inflation. Well, you'd probably want to own financial assets. The stock market would likely to be going up. Companies are profitable. Consumers are happy. They're buying new iPhones every year. And we're just chugging along. Everything's great. Okay. Okay, cool. But what about your gold? It'd just be costing you money but your house would be going up in value and the stock market would be going up in value. That kind of stuff. It's like, well, if the stock market's going up 10% a year and you're losing whatever your carrying cost on gold. So if you have gold bars sitting in a vault somewhere and they charge you $1,000 a month, well, your gold isn't going to be going up in value. Nobody wants your gold. If everything's cool, nobody wants your gold. So you're just holding gold. The price isn't going up. You have no capital gains, and you're losing $1,000 a month. Well, shoot, you can just put money in the money market and earn 2 or 3%. Why would you own gold? Or you could put the money in the stock market, take some extra risk, and make, between 8 and 12. You can own real estate and have it go up 20% a year some years, right? Between 5 and 20, depending on the years. And then rent it out and have a cash flow. Like, gold would be dumb in a scenario like that, right? You want to own financial assets. Because you could then also employ leverage, like get a mortgage, and mortgages would be cheap if inflation was low. So you mortgage up and you get yourself an apartment building, and your commercial loan for 5 years is at like 4%. Okay, dude, seriously, and your gold is you're losing money. So yeah. But then all of a sudden, things overheat. The government overspends. Inflation comes back. CPI goes, right, significantly higher than GDP. Uh-oh. And then maybe the opportunity for gold would change. So, there you go. See, it's only money. That's the easiest stuff. This analysis is the easiest stuff of trading. Trading is straightforward. But you have to be able to string the pearls together. But also, you have to have patience and discipline and fortitude to execute the trades. Well, how do you have so much patience and discipline and fortitude? How do you have that kind of confidence to make those decisions? Well, you have to have a ridiculous, sickening work ethic. If you want to get rich now, quit. If you think TRADARS is an alert service, quit. We don't need you. But if you have a ridiculous, sickening work ethic, and you want to develop the skills that will lead to patience and discipline and confidence, get on board the Clue train. Let's go. We're ready. Upward and onward. This is amazing stuff. Don't be left behind. Peace on earth. May the pips be with you. May your profits be above average. Oh, one last thing. That just happened!